when Bitcoin moons, everything moons. So we want to look for high probability setups. And today we're going to jump into ETC, Ethereum Classic. Do I care what Ethereum Classic is doing on a fundamental level? Well, when it comes to making money and profits in crypto trading, not so much. I want to look at the psychological chart patterns that tell me, is there a high probability setup where I can minimize my risk and maximize my upside? Is there a potential to make a 10x, a 20x, a 50x using some high level strategies? So I'm going to cover that with you today. So if you like today's video, hit the like button, subscribe, hit the bell notification, because I want to bring this wisdom to you. Now, if you don't know who I am, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. I've been trading currencies, the pound against the yen, the Canadian dollar, the US dollar, the yen against the Swiss franc, the krona, and so on and so forth. And in 2008, I was actually featured in the best-selling book, High Probability Trading Strategies. And I want to bring that knowledge and wisdom to you, to crypto, because this high-level analysis doesn't seem to be very kind of, it's not in the space. So I want to bring that wisdom to you. So let's just jump straight into Ethereum Classic. And by the way, if you're not familiar with Elliott Wave theory, which is what I use and lean on a lot, it's one of the best things since sliced bread when it comes to crypto trading and technical analysis. Take my free crypto trading masterclass. One of the 3 secrets that I cover is Elliott Wave theory, how to read and predict the future with high probability, which helps your decision-making process. So let's dive in. So first, on a weekly chart, all I'm going to pay attention to really is this. I'm going to zoom in and go, this momentum indicator. What the heck is a momentum indicator, Jagir? Well, this particular one I'm using is called Stochastic RSI. It's my favorite. But what I want you to see is it just tells us the momentum of the markets. And often it marries up with the highs and the lows, the highs of the price and the lows of the price. And it gives us valuable information. So the weekly says it's at a low and we're potentially going to see just more upside movement for 3 weeks, 7 weeks, 10 weeks, maybe even 12 weeks. So that's important information. Next, what I want to do is I want to jump into a daily chart where every bar represents one day. Now, I've done previous videos on Ethereum Classic. And what I do is I wait patiently for high probability setups. I'm not in a rush. This crypto space is not going nowhere. If something's taken off and I missed it, hey, guess what? It's like London buses. The next one's going to come in around 5 minutes. Maybe not 5 minutes, maybe it's 5 days. But hey, what's the rush? Let's just wait for high probability setups. Let's have patient hands so we can sit on those hands. And when we see the opportunity, that's when we take action. So when I'm looking at this daily chart now, what I drew earlier on is this wave 1. You know, we don't need to. Sometimes Elliott wave patterns are only really screaming at us as being obvious around 50 to 70% of the time. And when there's not a really clear Elliott wave pattern, we don't need to force the count. But what we can see here is that we've had a nice move to the upside. So we can put, that's just an obvious 1. And then we've had this correction, this overlapping waves. And I've labeled this here as a wave 2. So, but what I want to do and focus on today is look at 3 things. The first one, let's just zoom in. Let's just zoom in. I want to make this really, really clear for you. Maybe not that much. There we go. This much. Is we saw the weekly momentum indicator was oversold, and in the next couple of weeks it's probably going to have a turn. But the daily indicator is also oversold and is likely to turn soon. So that's momentum. Momentum is on 2 time frames, gives us a lot of information, valuable information. So we're going to take that data. Next, what I want to look at is chart patterns. So down here, we said this potentially could be a wave 2 low. But then we've seen this move to the upside, which I'm counting as a wave 1 on a lesser degree. If you've done my crypto trading masterclass, you'll see that I talk about when a wave 1 unfolds, wave 1 unfolds that way, it often breaks down to 5 mini waves, right? So this is the first of that mini wave. And then you have a correction, and normally it's 3 waves, A, B, C. So this is what I'm seeing over here. So let me just zoom in. Got a few lines. I've got 2 time and price points, but I can also label this a bit clearer for you with ABC. 3 waves is the minimum that we expect, A, B, and C. And I'm saying it looks like it should be a wave 2 low. So all of this, you can see that the price now actually tagged this part here. So I can actually get rid of all these other lines. Oh, don't want to get rid of the whole thing. I want to get rid of that number. And I want to get rid of the lower number. Well, and I can also get rid of this as well. Yeah, because what we don't know, because we project these things in advance. Hence, people call me the Oracle. Call me the Oracle. Why? Because we project these things in advance. Someone said to me the other day, you know, people talk about technical analysis, but often is in hindsight. You know, it's like in hindsight, this happened. Yeah, we can't make money with, yeah, this happened yesterday. We can make money on what's likely to occur tomorrow, right? So we want to do leading indicators. And so we don't know in advance. So what I mean by that is often the price would be around here. And we're saying in advance, we don't know, but there's two high probability resistance and time zones. This is one and this is the second. Right now, I don't know which one, but as the market unfolds and it reaches the first one, but the daily momentum indicator hasn't turned bullish yet, and then the next bar tags the second one, then we go, okay, it looks like it's the second one. So this could potentially be a wave 2 low. And this is where we are right now. So right now, with Ethereum Classic, I'm going, this is a classic setup for Ethereum Classic. We can make some good returns on this. Now let's just jump into a smaller time frame. Let's just go into an hourly chart. What is it, a 4-hour chart? Let me make sure on an hourly chart. Okay, let me just change this. I'm going to change this to a 1-hour chart. All right, so now this is the same part of that chart, but we're looking at a really micro scale. And you'll see, if I can just get this going here, a good entry point. There's a few ways of doing this. What I'm looking for is potentially, everything's been pretty much thumbs up. Now it's all about entry points. So what I'm looking for is this high to get taken out. That would be a good entry point. And my stop loss to, if I'm being a bit more conservative, down here. But if I believe this could be an A, what I'm actually seeing, I think, did I draw this? I might have drawn this. Let me just double check. Was it this one? No, I haven't drawn this yet. I'll draw it for you now. Let me draw this for you now. What I'm seeing here is typically a correction. This is like a microwave, wave 1. And then we should see 3 waves. And this doesn't look like 3 waves. This just looks like 1 wave down. And this looks a bit corrective. So we might see an A, B, a C come down. And I'll look for a long position down here. But the premise I want to get across to you today, the lesson today, is we can look for an entry point between here and then a stop loss down here. So our risk is this much. That wouldn't be a bad trade because the momentum on the weekly is oversold. The momentum on the daily is oversold, potentially going to come bullish in the next couple of days. We can wait. I would personally wait for the next bullish momentum reversal on an hourly chart and then looking to take a long position. I think more likely is going to be, we'll probably see like an A, B, and a potential C. And if that occurs, then it's textbook setup. Then I go, right, now I want to probably take a long position more along this point here. And I want to show you something. I said I was going to try and make this 5 minutes, but now I'm just like, I need to show you something. Because what's the difference between having your entry point here and your stop loss down here, and your entry point here and your stop loss down here? Let's just actually look in terms of returns. Let's say the market unfolded as we're anticipating. I need to show you this because most people don't get this. Because everyone's focused on buying the next meme coin or the next, I don't know, 1000x coin, which is, you know, not a bad strategy, but they're hard to do, right? And it's hard to kind of get in at the right time and sell at the right time. But what I've realized is you can actually get the same kind of returns if you know how to trade with a bit of leverage. It's a bit more of an advanced strategy, but you know, you're smart guys. So, and I teach this in my courses actually. What I want to show you is this here. I want to show you this here. Check this out. Right, if I enter at this point and I have my stop loss, this is still a very tight stop loss. The first option that I covered with you, but the price that I believe that Ethereum Classic can get to, I don't think I've drawn it yet. Let me just draw it for you. I'm just going to draw it for you. So I'm keeping it on an hourly chart because I know sometimes when I jump between charts, timings, it can get a bit confusing. So the typical price projection for a wave 3 is going to be, we measure wave 1, we project it from a wave 2 low. If I can get this low, it's not letting me get this low, let me do it from here. Boom. And the projections that we want is not the 100, though that is the minimum. The typical is 1.618, and then the typical maximum of a wave 3 high is 2.618. So what we can do for this exercise is go, okay, there's a high probability Ethereum Classic in this next leg of the bull run, if it unfolds as anticipated, could get to $300. And today's price is $100. That's like a 3x. So if you just buy the underlying token on Ethereum Classic, That's a 300% return. So you invested 1,000, get 3,000 returns, so 2,000 net. That's not bad. That's not bad. However, we know how to trade with stop losses. This is why I recommend my crypto trading masterclass, because I covered this and the concept of this, because it's like the theory, understand the concept in the theory, and then how can you apply it in the real world. Is if you manage to enter with the first position, you know, on that swing high with a stop loss, and the market did unfold, and we did manage to hold a part of our position for that whole run, you're looking, rather than just a 3x from $100. Is it $100? Yeah, it was $100. Is that today's price? No, sorry, it's $50. Today's price is $50. So it's a 6x. Apologies. That doesn't sound right. It's around a 6x. But rather than getting a 6x, we could potentially get, you ready for this? A 60x, 10x more. Yeah, it takes a bit more skill. There are some pros and cons because you don't own the underlying asset. You're trading it with a stop loss, so you can get stopped out. But even if you just risk 3% of your account, which is what best practice is, 3%, but you make a 60x, well, 60 times 3 is 180. So that means your whole account size would almost triple. Like it's net 180. So if you had 10 grand, you'll get another 18 grand on top of your 10 grand, which takes it to nearly 30 grand. So that's the power of leverage and trading crypto, rather than trying to just buy the next, you know, coin that's going to moon, but you have to get it in at a really low market capitalization. So there you have it. Ethereum Classic is doing a classic setup. Is a nice 1, a 2, and then a microwave 1 and a wave 2. And I covered this in one of my live, where I have a lot of students, and we have live sessions on Monday. People that are part of my advanced courses, we do. I bring a lot of opportunities to the table, and I said one of the best times to buy is when you see a wave 1 and then a wave 2, and then you see a microwave 1 and a microwave 2, is to enter on this wave, next wave 3 of a 3. That's why I call it a wave 3 of a 3. Why? Because they tend to be the most impulsive, most aggressive, and most profit producing waves, and we want to be in it before it takes off. We want to enter the rocket before it takes off. And if you do that consistently, not all of them are going to unfold perfectly, but when they do, that can pretty much make your year. You know, 2, 3, 4, 5 of those kind of trades that unfold, like really unfold, and you manage to surf that wave, and you can even compound, which is adding to your position. You can make some serious gains. So Ethereum Classic, watch it carefully. I'm going to be looking for a long position in this. I haven't entered it yet, so I'm just looking to see if we do get that final wave C on a lesser degree. If I do, man, I'm going to get in on a really tight stop loss. Let me show you one last thing. Because this is why I wanted to show you in the first place. Why I wanted to show you. There's pros and cons to this, but I'm going to show it to you anyway. So, in fact, if I got more precise, it was here to here was my original entry and stop loss. And the return would have been around a 52x, right? But imagine if it does unfold as that ABC that I was talking about. Let's not worry about this. I know it's a bit messy. But the entry point would then be down here, and the stop loss would be here. And this is because Elliott Wave Theory and Fibonacci actually applies to all time frames: weekly charts, daily charts, 4-hour chart, an hour chart. The math psychology just repeats itself on lesser degrees. But if we manage to get a tighter stop loss, yes, there's a bit more risk of getting stopped out. But if you manage to successfully enter, I also recommend exiting a part of your position relatively early, so you become risk-free quite fast. All of a sudden, if you look at this number here, the potential, if it reached that same point, that same $300 mark, all of a sudden goes to 200x. Yeah, 200x. Now if you risk 3%, 3% times 200 is 600, which means your whole account size with one successful trade could potentially go up by 6 times. That is immense. But you might get stopped out a few times, which is okay. But I teach some of that in the crypto trading masterclass. Take the masterclass because you'll get more value out of my videos. I'd love for you to become one of my students as well, because we do some really cool stuff, and I bring research and education, these kind of opportunities live. Because I know there's a bit of a lag between when I'm recording this and when you see the video. Sometimes it's a day, sometimes it's 2 days. But that's just the nature of life. But if you like today's video, hit the like button, subscribe, hit the bell notification, take the free crypto masterclass, and I will see you very soon.